Morning traders, this is my morning video for Thursday the 6th, October 6th. And we had a one hell of a day yesterday on the volatility in the markets. The SPY, you see this huge candle. We have not seen that kind of move for a long, long time. But at any rate, some things I'm looking at right here. I got a little candle here, or a fib fan set up here. And basically, for the near-term trend, we're like in a consolidation zone, and we have broken any kind of upside momentum in the short-term trend for the S&P 500. So be really careful trying to pressure longs here, because the upside momentum in the short term is broken, and in the intermediate term, we are in a more bearish tone. These fib fans back here, that was your driving force to the upside, and now we're approaching the neutral zone on our intermediate trend for the S&P 500. So it becomes, the closer we get to this trend, it becomes much more riskier to take trends to the long side at this point. And don't forget, look at that volume yesterday. So, there's quite a bit of fear in the markets as of yesterday. Okay, on your NASDAQ, this is a increasingly troublesome development here that we have on our NASDAQ. We have breaking down away from the uptrend as of yesterday. We had a gap down away from we were still holding on to the bullish trend as of yesterday. Then we had a gap down, and we gapped down away from the bullish trend. Now we're in the bearish side of the trend. So just keep this in mind that, and man, look at that volume on the NASDAQ yesterday. So basically what we're doing now is the prior breakout levels, we're putting that back in the cards that we're going to be back testing the prior breakout levels possibly here. And we are, we're in a whole new fib fan zone, trading zone that we've not had any closing prices in since the beginning of this uptrend back in July of 2018. So this is actually a much more negative scenario than what you would actually realize on just looking merely at pricing action. And your NDX, NASDAQ 100, it's pretty much looks almost exactly the same as your Qs right here. So that's just something to keep in mind, that your S&P 100 seems to be trading in tandem with the Qs. Now on your IWM, if you remember, it broke out sooner than the other indices. And we are crashing down here. I mean, literally crashing down in our Russell. And so this is probably going to be the one to back test the breakout area the soonest. And I do see that coming. So just keep that in mind, that I see quite a considerable more downside risk in the IWM, because we haven't even gotten a real good back test yet for this breakout. Your diamonds are holding out real good so far, but we do have a doji for the week. Keep in mind that, well, let me go on my daily real quick. Yeah, we filled the October gap as of yesterday. We came crashing down, filled the gap, which I mentioned in my prior video about that possibly happening. So the diamonds are still looking pretty good here, but just to look at that volume spike, that is concerning to see volumes like that. We'll see what happens here, but of all the major indices, the diamonds are holding up the best. And like I have mentioned in my other videos, I see some relative strength with Boeing and relative strength with IBM. So we'll see how things go with the markets, but there are reasons to think that the diamonds will hold up a little bit better here. Something that I'm starting to really watch carefully here, and that's Amazon, especially as weak as the Qs has been right here. Um, we are testing a critical fib zone. We managed to close on that yesterday. So uh, if Amazon decides to start breaking this zone, which that'll be next week, we might hold out right here for the rest of the week, or maybe even bounce. But yeah, if Amazon decides to start going lower than what we saw this week, there's all kinds of trouble possibly setting up for Amazon here. So just keep this on your radar that Amazon profit takers might be right on the horizon here. So just keep that on your radar. Apple, we have a weekly doji here at the range highs, in my opinion. I think there's a very good chance come next week we're going to open lower than where we are right now for Apple. So just keep this one on your radar that I think this is a blow off top candle, and we'll see how the next 2 days or the next today's Friday, isn't it? The next 2 days or how today will go, but it's not looking very healthy for Apple here. Uh, I'm thinking we're probably going to doji out on Apple, and it won't trend at all today. Well, I've been saying since the congressional hearings that the whole social media sector was in a lot of trouble, and I have a price. My first target for Facebook is 148 for possible support. And here we are going into the last day of the week, and we're right here at range lows. So be extremely careful. This, one of those scenarios, especially given the fib zones and everything, that it can open lower and continue to go lower the rest of the day. So this is just one to keep on your watch list. Our semiconductor index, we've had a few situations where the intermediate term trend has closed below the 50% fib fan. Well, as of yesterday, we closed below it again. And this is actually another thing you want to look at whenever you're looking at these fib fans is the distance. This here has probably one of the weakest relative strengths compared to the fib fan we've seen in a very long time. So it was quite bearish despite the fact that the price action isn't completely reflecting the move, and extremely high volume. So just keep in mind that your semiconductors might be getting in trouble here. And if you go out in your longer time frame here, and if that is the case, we're getting some rotation out of the semiconductors. Your weekly 50% fib is probably in the cards in the not so distant future, and that'll bring you down to the 102 area. And considering how much we moved, one whole point just yesterday, so it wouldn't take much to get down there. Keep that in mind. And we are in the long term. Right here is your long term 50% fib fan. So it's trending to the weekly long term 50% fan. So the closer it gets to that 50% fan, the less bullish momentum comes into the sector. So just keep that in mind that we're slowly but surely drifting towards. Well, we could always bounce, of course, but more to a neutral to a bearish stance in the semiconductors. Another real hot area to keep in mind here if this market is going to start fading lower, and that's your regional banks. And we got a shooting star yesterday on the candle. It was looking really good with the interest rates. It was going up with the banks and stuff. But the regional banks are the ones that are going to be hit the hardest for an inverted yield curve. So if these bond yields manage to stabilize, then we're probably going to get a bid back into our regional banks. But right now, both the long-term and intermediate-term trends for your regional banks is bearish. So just keep that in mind. you're fighting the trend if you try to chase after your regional banks. I'd much rather be with the trend and short the pops on the regional banks, in my opinion. Okay, on our retail stocks, it's no coincidence that we stopped where we did yesterday for the XRT in the crash down moment. We've had a trend going on since March that we tested the Fib fan mid March, and we came crashing down to the Fib fan area yesterday. And so these areas up here are all the momentum bullish phases. Once we cross down into this zone down here, that's whenever we're starting to move into a more bearish scenario for the retail stocks. And so far this week, we're still holding into the bullish phase, which could be an amazing buy opportunity. Even I don't even have a crystal ball for that. So just keep that in mind. On our intermediate term, we have already crossed out of the bullish phases. Okay, so the short-term trend, we're barely holding bullish momentum, but in the intermediate term trend, we've already went into bearish territory. So, or into a more bearish territory. Okay. One of the last movers up in this market was your healthcare and your biotechs, and those people tend to have the weakest hands in the market going forward. And the shortest term time frame that we had started back in May of this year, we're already crashing down just this week to the 50% fab again on so, and we do have a little trend line here based off the September 17th week low, and we closed right on that as of yesterday. So we are threatening a trend change in your IBB, which, depending on how the markets go today, we'll see what happens. But yeah, the trend does seem to be more bearish here, so be really careful. We are in a very bullish up phase still in the IBB in the intermediate term, so this one here could quite easily see a responsive bounce. So just keep that in mind. And I want to finish this video. Costco has had an amazing run since last earnings, up over 15% for the quarter, and they reported earnings last night. And right here, right now, we got Costco opening up at 226. So it's officially breaking the uptrend since that's been going on since last earnings season. So that's really bad for your retail stocks. So keep that in mind on your Amazons and all those. I was already mentioning Amazon. I was threatening a breakdown. Well, with Costco coming in and them selling it off like they are, I didn't have the watch the earnings call, but this is not a good scenario for the morning. Okay, so be real careful today. I would still lean to the downside, and be careful not to press them too hard with because we have had an amazing drop that the markets hadn't planned for this week, and the market makers will probably try to keep prices inflated so they can prepare for next week. So anytime you have outside moves, the market makers do try to defend their positions. So be careful. Okay? Thanks a lot.